So when people look at the stock market, and all you guys with your 401ks and all this stuff and IRAs, whatever you guys carry, that's not where the problem is. The problem isn't in the stock market. The problem is in the shadow banking system. And there's a reason it's called shadow banking. It's shadow because we can't see it. And the real problem, the biggest problem of all, sits in that shadow banking system, which they'll never tell you on CNBC and Fox News and Today's Show and all that other happy talk people. The hard talk is this: the shadow banking system's out of sight, and the average guy has no idea what they're doing inside there. So the shadow bank is been of the repo market. It's called the repurchase market. So what happens in the repurchase markets when the big banks get in trouble, that's where the shadow guys come in and they prop up the banks. So that's one market. It's called the repo market. The second is called the corporate credit market. And those are those guys that are screwing the stock market. All of you think those stocks are going up because the economy is strong? No. The reason the stock prices are going up is because the CEOs and the executives of those big corporations are goosing the market. They want to they borrow money from their, like let's say General Electric. I borrow money from General Electric and I jack up the stock price. Now, why would a CEO jack up the stock price? It's because they can sell their stocks and they exit and they pay less taxes. They go on as capital gains tax versus ordinary income tax. So the CEOs running the company are screwing the company, the shareholders, and everybody. So again, if you want happy camp, this is not, don't tune out now. I'm not politically correct. So that's called the corporate credit market. And what's happened is our corporations such as General Motors, Ford, AT&T and all that, they've been downgraded from AAA credit to triple B. Triple B is one step above junk. If they raise the interest rates, major corporations in America will go into junk status. And that's the worst thing that could happen. So that's the corporate credit market. The third market is called the commercial paper market, and that's where the problem really, really lies. Commercial paper is where they keep making the problem bigger and worse. So if a company gets in trouble, then investors like me rush in and we give them money so they can keep their fake company, their zombie company going. So the commercial paper market is the really big problem. And what's happened is that the rich guys like me are not putting money in there because they know it's about to come down. So once again, those are the three parts of the shadow banking system: the repo market, corporate credit market, and then the commercial paper market. So the reason the Fed just went to $850 billion for the commercial paper market is because nobody's putting money in it, so the Fed had to QE them. And then they went from QE, quantitative counterfeiting money, they went from $85 billion a month to $150 billion a day. That's the problem. It's in the shadow banking system, not the stock market. And they'll never tell you that in high school economics or college economics. So grow up, that's what I'm saying. I'll never be PC, but I will tell you the best that I know. Not saying there's so much we don't know, but I'll tell you the best I know. Thank you.